Hi guys, Jim Davis here with NAI Beverly Hanks in Asheville, North Carolina. Today a little market update, one I promised to you, on the topic of opportunity zones. So there's kind of two aspects of this. There's kind of the property side of it, and then there's the incentivization side of it from a financial stance. And so I'll dive right into kind of the property side. So what we've done with opportunity zones is the IRS came up with this idea of let's identify areas in cities throughout essentially all the states, and we'll find areas that maybe haven't really seen the dollars pouring into development. Think of maybe an area of your town, whether that be Asheville or another city and state, that is close to areas that have seen really powerful development in the last 10 years while the market's been great. But these specific areas, maybe they've got the rundown shopping centers, buildings that have sat empty for a while in these commercial spaces. So the big question is, first, let's identify those areas, which they've already done. You can reach out to me if you're curious if there's any of these areas around where you live. I'm happy to search for you. But now that we've got these areas identified, the next question was, okay, how do we incentivize and get those with the funds to invest in something like this? How do we entice that individual or that corporation to move those funds from other investments into these opportunity zones and try to make those areas thrive again? And the answer was what I feel is really great. It was really clever, and I'm excited to see the result as this all gets rolling. So the idea was, let's incentivize it through helping those investors out through their capital gains taxes. So in short, if you're not familiar with capital gains taxes, you've got an investment, you cash out, you are going to be charged tax on the gains that you made in that investment. So that may be stocks, that may be commercial property, that can be like 1031 exchanges where maybe you have a second home that you held and it wasn't your primary residence. All those things, when you sell and cash out, you're responsible for those capital gains taxes. So for investors, a lot of times what they're looking for is ways to maybe defer these taxes when they unload those investments, or get discounts on them. So that was the approach in opportunity zones. So they're really approaching it from both of those standpoints, in the sense that if you move funds from something that you're going to be responsible for those capital gains into what we're calling a qualified opportunity fund, and you can look at that as kind of like a any other fund. It's a grouping, a pooling of those funds to make specific investments. To be a qualified opportunity fund, 90% of those funds have to be used to invest in properties in these qualified opportunity zones. And then there's obviously some additional stipulations that we know some of those, we'll get into this later, but we're still not certain on all of them. So essentially, you move those funds, you put them in a qualified opportunity fund, and you get rewarded for having them there, essentially, by a discount on those capital gains taxes, as well as potentially really significant help with any further capital gains that you make in that new investment. So if you invest the property, if it's held for 5 years, they're going to give you 10% reduction in those capital gains that you're responsible for from those previous funds. If you hold it for 7 years, they're going to give you another 5%, so a total of 15% off what you owe at the end of that holding period. And then if you hold it for 10 years, they are going to defer those capital gains taxes throughout that entire 10-year holding period. Additionally, if you hold it for that 10 years, and now let's say you unload that investment, whatever that qualified opportunity fund invested in, everyone sells out of that, they are going to essentially, you get a freebie, you get a tax-free card, you could say it, those new capital gains on whatever you were invested in with that qualified opportunity fund. you're free. You're off the hook of those new capital gains taxes. So you still owe a portion of the previous, but you're off the hook on that new stuff. And that is really powerful. That is, I'm really surprised there hasn't been more talk about opportunity zones in the news and in local investment. And it's kind of sad. That's why I'd like to make this video is, it's such a great opportunity if you're in the position to, maybe you want to unload funds from the stock market. I've had a lot of friends that in the business that have a lot of money tied up in the stock market, or maybe like, not feeling overly confident right now. Maybe I'll pull some of that money, put it somewhere else. This is one of those perfect opportunities. And what's better than taking that money and investing it in your local economy? How great is that? I recently had somebody ask the question in this discussion of, well, I don't have the money to invest in a qualified opportunity fund. I don't have money sitting in stocks. How does this help me? I'm struggling to get by. And again, this is money being invested in our local economy in areas that are essentially struggling right now to see, progression and development. So by reinvesting this money in these commercial spaces, this means these are going to be new businesses. These are new jobs. These are revitalizing areas of our town that just haven't seen it yet. So it's going to help everyone. Just because you're not rolling in money and have all these investments to switch your money around and profit from, everybody's going to profit from this in some way. So I think it's really important. I think it's great. Now, the disclaimer on this is we were supposed to have all the details of the regulations associated with this at the end of last year. Government shutdown obviously put a stop to that. That's been delayed. I just spoke to somebody a few days ago, and I was told the expectation is to have the final details in this next 30 days, so essentially February. So I'll try to make another update for everyone on that. For the time being, though, we've got kind of this rough outline, but the fine print, you could say, is a little bit unknown. So yeah, I've got a write-up associated with this. Check that out. It's got some more of those kind of fine print details. I'd love to hear your thoughts. What are your thoughts on the positives, the negatives? Are you skeptical of this? Are you excited for it? Let me know. I'd love to hear. And again, when we get those final details, I'll do an additional write-up and an additional video. So watch for that. If you've got things specifically you'd like me to address in that video and answer any questions, just let me know. I'm happy to. So I hope you guys have a great week. Talk to everyone soon. And yeah, I'll be giving you an update. Thank you.